Okay, let's unpack this. Welcome to the deep dive.
Hey there.
We're jumping straight into the first quarter 2025 results for Elbit Systems today.
Yeah, pulling directly from their latest earnings call material.
Exactly. Our mission really is to give you the clearest picture of what actually happened this quarter.
And maybe what it tells us about the wider defense sector they're in.
Cutting through the noise, getting to the insights that, actually matter.
Right. And that call, it offers a pretty fascinating look at how these big global dynamics are playing out in their business.
For sure. It's not just the headlines, is it?
No, not at all. It's the details, the management comments, the stuff that explains why the numbers are what they are.
Absolutely. And the big headline right out of the gate, momentum. This is what, 4 quarters in a row now? Double-digit year-over-year growth.
Across all the key things.
Yeah.
Revenues, backlog, operating income, net income, EPS, the works.
Management sounded, very pleased. And looking at the numbers, you can see why.
They've definitely caught a strong tailwind. And importantly, that free cash flow number, $161 million this quarter.
Yeah, that jumped out. Strong cash generation.
Always crucial, right? That indicator of real financial health.
So let's dive into some of those specifics then. Revenues.
Okay, revenues for Q1 2025, $1.896 billion.
And just for context, that was $1.554 billion a year ago in Q1 2024.
Yeah, so pretty substantial jump there.
And they broke down where it came from, geographically.
They did. Europe was the biggest slice at 24%. North America, pretty close behind at 21%.
Okay.
Asia Pacific was 18%, and then Israel contributed 32%.
So really broad-based.
Yeah, they were clear. Demand is robust pretty much everywhere they operate.
Okay, so revenues are way up. How did the margins hold up with that kind of growth?
Well, gross margins were, pretty steady, maybe slightly down compared to last year, but not that much.
Right.
GAAP gross margin was 24% versus 24.1% last year. Non-GAAP was similar, 24.3% versus 24.7%.
Right. But you said operating income tells a better story.
Yeah, exactly. This is where you see the profitability really kicking in. Operating income took a significant leap.
How much?
Okay. GAAP operating income was $149.7 million. That's 7.9% of those revenues.
Compared to?
$105.4 million or 6.8% last year. So nice margin expansion there.
In non-GAAP.
Even better, $165.1 million, so 8.7% of revenues. That's up nicely from $121.6 million or 7.8% last year.
So costs must be well managed then if margins are improving on higher revenue.
That's part of it, yeah. You see that leverage operating income growing faster than the revenue. And if you look at their OPEX, R&D, marketing and selling, G&A, they all actually decreased slightly as a percentage of revenue compared to Q1 last year.
Ah, okay. So good cost discipline as they're scaling up.
Seems like it.
Any other expenses we should note? Financial expenses.
Yeah, those were up a bit. $39 million this quarter compared to $31.2 million last year.
And the reason?
They said mainly things like hedging transactions and currency fluctuations. Pretty standard stuff for a global company.
I think tax.
Tax expense was also up in dollar terms, $16.1 million versus $11.6 million. But interestingly, the effective tax rate actually went down a little.
Oh.
Yeah, 13.9% this quarter versus 14.6% last year.
Got it. So putting it all together then, bottom line, EPS.
Flowed through really nicely. Diluted EPS on a GAAP basis jumped to $2.35. That's up from the $1.65.
Wow.
And non-GAAP diluted EPS was $2.57 compared to $1.81 last year. So really strong growth there.
And they kept the dividend going.
Yep, the board declared a dividend of 60 cents per share.
Okay, let's circle back to cash flow. You mentioned the $161 million free cash flow, but the operating cash flow swing was dramatic, wasn't it?
It really was. Net cash from operating activities was a positive $184 million this quarter.
Compared to last year where they actually used cash.
Exactly. They used $6 million in Q1 2024. So going from using $6 million to generating $184 million, that's a huge step change.
What drove that, besides just higher income?
Well, the higher net income definitely helped, but a big factor was a strong increase in contract liabilities and down payments.
Ah, so customers paying up front more?
Essentially, yeah. Cash coming in the door before all the work is done. That added an extra $170 million just this quarter. It signals, strong customer commitment.
And there was a one-off boost in there too, right? Something about a grant.
That's right, yeah. A $57 million grant from the Israeli Land Authority. It's related to a facility relocation plan for late 2026.
So a nice little non-operational kicker for the quarter's cash.
Exactly. But even if you take that out, the operational cash flow was still very robust, leading to that $161 million in free cash flow we mentioned.
Okay. So cash generation looks really healthy. What about the future? The order book.
Another area of, frankly, record strength. The order backlog hit $23.1 billion as of March 31st.
23 billion. Wow. How does that compare?
That's $2.7 billion higher than it was just 1 year ago. That gives them fantastic revenue visibility.
Incredible. And is that mostly domestic, Israel, or international?
Mostly international, actually. About 2/3, 66% of that huge backlog is from customers outside of Israel.
It's interesting. And how quickly does that backlog turn into revenue?
Well, they broke that down too. Around 51%, so just over half, is scheduled to be recognized as revenue over the rest of this year, 2025, and through 2026.
And the rest?
The rest stretches out into 2027 and beyond. So that backlog, it really underpins confidence in sustained revenue for quite some time.
Okay, so massive backlog, strong current growth. Let's break down where that growth is actually happening. Which divisions are firing?
Right. The segment performance kind of highlights where the demand is really hitting hard.
Let's hear it.
Okay. Aerospace revenue up 20% year over year. That was driven mainly by sales of precision-guided munitions.
Where to?
Especially in Israel and the Asia-Pacific region.
Got it. What else?
C4 and cyber grew 12%. Seeing strength there in radio systems and command and control systems, particularly Israel and Europe.
Okay, ISR and EW, that's intelligence, surveillance, reconnaissance, electronic warfare.
Yeah, that was up 4%. A bit slower, but still growing, mainly from electro-optic system sales.
All right, now the big one.
Yeah, the real standout was the land division. It surged 48% higher year over year.
48%. What's driving that?
Primarily ammunition sales.
Yeah.
Huge demand, especially in Israel and Europe.
Right.
And they pointed out that after integrating an acquisition, PMI, their land division now offers like full turnkey solutions. Meaning they can provide the whole package, the artillery pieces, the command and control, the electro-optics, the training, and crucially, the ammunition.
Ah, well, a one-stop shop.
Exactly. And demand for those integrated systems is really growing, they said, especially in Europe.
Makes sense. And their U.S. operation, Elbit Systems of America.
Also strong growth there, up 18%. That was driven by warfighter systems like gear for soldiers and also medical instruments.
Okay.
They seem pretty happy with their night vision acquisition too, and they see more potential in those integrated infantry soldier solutions.
Any specific wins mentioned there?
Yeah, they highlighted a $112 million contract with the U.S. Marine Corps in that area.
Okay, so strong performance across the board, but land is really booming. How does this tie into the bigger picture, the market trends they discussed?
Well, it ties in directly. Management sees this high demand continuing. They even use the term super cycle.
Wow. Driven by?
Driven by, well, obviously the ongoing conflicts in Ukraine and the Middle East. Those are prompting governments everywhere to significantly increase defense budgets.
Right. We're seeing that reported widely.
They also noted commentary about President Trump encouraging NATO allies to boost their defense spending. They see that as another factor kind of propelling this environment.
And just to be clear, we're reporting neutrally what was said in the source material there.
Absolutely, just relaying their perspective from the call.
And speaking of NATO.
Right, this was important. They highlighted the NATO Secretary General's proposal. It's expected, I think, at the June summit.
What's the proposal?
For a further significant increase in European defense spending. They're talking about targeting 5% of GDP by 2032.
5%. That would be massive.
Huge. If that gets adopted, it represents a potentially enormous long-term tailwind for the industry.
And Elbit feels well positioned for this.
Yeah, management really emphasized their geographical footprint, having strong presence and relationships in Israel, the U.S., Europe, and Asia-Pacific. They feel that's kind of a unique advantage to capture this rising global demand.
And you can see that demand showing up in the actual contracts they're winning, right? They mentioned some specific examples.
Oh, yeah. This is where it gets really concrete. For instance, they secured a contract around $100 million for joint national digital fires command centers for a European country.
Yes.
An $80 million contract for advanced airborne self-protection suits, that's electronic warfare. EW gear for the Israeli F-16I fighter jet fleet.
Protecting the planes.
Exactly.
Yeah.
And also maritime EW. They won contracts to put self-protection solutions, like their Mark V countermeasure dispenser, onto a frigate for a NATO European country.
Countermeasures against missiles and stuff.
Right. And another big area, counter-UAS, countering drones.
Ah, yes. Very relevant now.
Very. Their Red drone system, which detects and neutralizes enemy drones, was secured by another NATO European country. It shows what capabilities are really in demand right now.
And didn't they talk about a big artillery system win too, PULC?
Yes, the PULS system, that's their Precising Universal Launching System. It's been selected now by multiple European countries.
Cool.
Germany, the Netherlands, Denmark, and another unnamed European NATO country. They mentioned a $130 million contract specifically for that last customer.
What's special about PULS?
Well, the key things they highlighted were its scalability. It can hit targets from like 35 kilometers all the way out to 300 kilometers.
Wow, huge range flexibility.
And its versatility. You can launch a whole range of different rocket types all from the same launcher. That flexibility seems to be a big selling point.
Okay, so lots of current contract wins. Did they talk much about future tech, R&D?
They touched on it. Mentioned their presence at the Aero India show.
Yeah.
Saw strong interest across their portfolio. Their UAS, drones, EW, precision munitions, countermeasures.
The usual suspects for growth areas.
Right. And they gave an update on Iron Beam, their high-power laser system.
Ah, yes, the laser weapon. What's the status?
Interest is apparently growing. The land-based version, they expect it to actually be operational by the end of this year, 2025.
That's soon.
Okay.
Yeah.
They did emphasize it's a significant engineering effort, and they're still investing heavily in the airborne version, too. That's obviously a different challenge.
Makes sense.
And they also referenced that big contract from last October, $200 million, that positions them as Israel's lead center for laser tech, both ground and air applications. They suggested more updates on that front will be coming.
So definitely an area to watch. Okay, let's try and connect the dots here. What does all of this information, this deep dive, mean for you, the listener?
Well, I think it shows pretty clearly how these big geopolitical events we read about are translating directly into, real business results for companies like Elbit.
Right. These aren't just abstract numbers. They reflect actual demand for things like precision weapons, advanced artillery, electronic warfare gear.
Exactly. And that record backlog, $23 billion. That gives you a solid foundation, right? It provides years of revenue visibility. Suggests this isn't just some short-term spike.
Yeah, it points towards sustained spending and long-term contracts being signed.
And the specific contract examples, they give you clues about what capabilities nations are prioritizing right now. Counter-drone tech, versatile artillery like PULS, protecting aircraft and ships with EW.
And then looking forward, that focus on tech like Iron Beam, the lasers, it signals where the industry might be heading next. Directed energy, advanced sensors, those seem like future growth drivers.
Definitely. And underpinning all of that is the strong cash flow generation, which just adds that extra layer of financial health and flexibility to invest in these areas.
Okay. Now let's completely switch gears for a moment. Time for our speculative exercise.
The "this is not financial advice" segment.
Absolutely. Emphasize that heavily. This is purely hypothetical, drawing on themes from the call, not advice.
Got it. So let's pitch an outrageous but plausible trade idea based on what we just discussed.
Okay, lay it on me. What's the idea?
All right, so you take that land division, right? Massive 48% year-over-year growth.
Driven heavily by ammo sales in Europe.
Exactly. And management specifically hinted about increasing quantities and the potential for better margins, particularly from those European deals as they scale up.
Okay, so you're thinking operating leverage, scale benefit.
Precisely. That's the plausible part. When you ramp up manufacturing, especially for things like ammunition or integrated systems, your fixed costs get spread over more units. Margins can expand significantly.
And European demand is surging. Elbert's got the turnkey solutions. The PULS system wins.
Yeah.
It seems timed well.
Right. So that's the plausible foundation. Now, the outrageous part?
Here we go.
The outrageous part is betting heavily, maybe with leverage, on the rate of that margin improvement in the land division, accelerating way beyond what anyone currently expects.
So not just that margins will improve, but that they'll improve much faster and higher than the market thinks.
Exactly. You're essentially making a highly leveraged bet that the land division's profitability explodes upwards and becomes a disproportionately huge driver of Elbert's overall earnings, maybe much sooner than currently priced in.
How would you even structure that, hypothetically?
So hypothetically, maybe through some complex, far out of the money option strategy, you target a specific date, maybe tied to that NATO summit timeframe or when those big European PULS contracts are really expected to hit full production stride.
Wow. So very speculative, betting on a specific division's margin expansion rate.
Totally speculative. High risk, potential high reward, based entirely on extrapolating that management comment about margin potential onto this backdrop of massive demand and strategic wins.
Okay. Definitely outrageous, but I can see the thread connecting back to the call's themes.
Yeah.
And again, everyone, purely hypothetical. Do your own research. This is absolutely not financial advice.
Always do your own homework.
Okay, so wrapping up this deep dive then. Elbit Systems, another really impressive quarter. Double-digit growth across the board.
Yeah, fueled by that global defense demand that, frankly, shows very little sign of slowing down.
And that record backlog underscores it.
Specific areas like the land division are just booming, and they're clearly investing in those next generation technologies like lasers and integrated soldier systems.
And hopefully, digging into the specifics like we did today gives you a much richer picture than just reading the headlines.
Absolutely. It's about understanding the why behind the numbers.
Right.
So as you think about all this information, maybe here's a final thought to leave you with.
Okay.
Given the geopolitical climate, the conflicts, those ambitious targets like NATO, possibly aiming for 5% of GDP on defense spending by 2032, are these strong results we're seeing from companies like Elbit just a temporary peak, a reaction to current crises? Or does this kind of earnings call signal something more fundamental? Are we actually witnessing the start of a much longer, structurally shifted landscape for the entire global defense industry?
A major long-term expansion.
Yeah. Is this the new normal unfolding? Something to definitely ponder.